You are looking live at the Dow Jones Industrial Average daily chart. And I just showing this because it's trading at an all-time high. And this is a weekly review, so I'll show the weekly chart. And this is textbook stuff here, in my humble opinion. As we can see, the sell-off, which had to do with interest rates, the recovery, and then the three-wave down pullback, and now the ramp the last couple of months. And we've had a great 6 weeks here, 7 weeks at mzstockcharts.com. And it's not because we got smart all of a sudden. It's because the indexes are starting to cooperate. They have been since the follow-through day. You can see the same thing here on the weekly chart of the S&P 500. The nasty bear market of 2022, the three-wave down. You could see that, and now the follow-through day, and the this is a classic textbook cup with handle pattern. I'm going to show the Nasdaq as well. Same thing. Let me get this out of here. This bear market that we had in 2022 was a 38% peak to trough correction, if you however you want to call it, but from 16,212 to 10,088. That's 38%. I'm going to go to the monthly here, and you take a look at how long it's been since the Nasdaq did something like this. I mean, that's a nasty bear market. Now, there's a lot of bears out there thinking that the market's going to crash, the economy's horrible, it's doom and gloom, but we don't see this type of stuff very often. You had it in 2000 to 2003, and then here in 2008, 2009. Sure, you had some tremors here along the way, but nothing like this. That's a massive bear market. And there you see, you can see the pronounced cup with handle here, the 3 months down, August, September, October. Now the last 2 months are starting to rally again. Let's go to the daily chart here on the Nasdaq. There you can see, we had a breakout in May. On May 10th, it ran up, and then we had the correction of the three waves down. And now we have the follow-through day on November 1, and it's just been rallying ever since. Yeah, it might be a little overbought or extended or whatever you want to call it, and it may need to pull back a little bit, but it's all about interest rates. As the Fed was raising rates, the multiples contracted and growth stocks got hit. We saw software names go down 90% or more. And now it's recovered. This is the software ETF. And if you look at the weekly, I mean, that's a one heck of a correction. It's recovered, and now the rally. You can see this nice flat base and moving higher. And I'm going to show the Russell as well. I got to show the Russell. So interest rates go up, and these growth stocks get hit. Small caps get hit. I'm going to go to the weekly on the Russell. And then now interest rates, according to Jerome Powell last week, he said that, believe that they're planning on some rate cuts. So as the rate cuts, as the rates come down, our growth stock should do better. And they're starting to rally. This is the Russell 2000. You could see it hit bottom and now has made a nice recovery. And the great Tom Lee thinks it could be a 50% gainer in 2024, and I'm not going to argue with Tom Lee. So I will just see what happens. He gets paid to make predictions. I don't make predictions. But those are your indexes, and I don't trade indexes. Powell said they're going to, lower rates in 2024. And then you have this joker Williams come on Friday and say that, they haven't discussed it at all, which is really an insult to our intelligence, because the markets are telegraphing the rates are coming down in 2024, and the Nasdaq is really responding here, and you can see the volume. I just wanted to point this out here. Is I always tell the folks at MC Stock Charts, if you're owning a stock or an index, you got to make it prove himself. You got to see if the institutions are supporting your stock, and they're definitely coming into this index right here. How do I know? Well, it shows right here at the bottom. Those big blue volume bars tell us that institutions are coming back in. They might have been short, or they might have been underinvested. Doesn't matter, whatever. They're buying stocks. Now, I'm going to get to the stocks here that I like, but I'm going to go through the Mag 7 because I believe we're probably seeing some window dressing into the year end. They'll probably do well. They did most of the heavy lifting in 2023, and I doubt they outperform in 2024. That maybe they will, but I just kind of doubt it. I'm going towards more smaller, leaner, meaner, growthier stocks. But Apple certainly looks good. There's going to be a rebalancing in the QQQ, which on Monday, which might have affected it last week, or maybe even next week. And this is Microsoft. Same thing. These are set up. Now, I just wanted to point out with Apple and Microsoft, long periods of consolidation, flattening out. These things look good. I wouldn't be surprised to see Microsoft break out to new highs here. Apple, same thing. Meta, same thing. I mean, these things are going to be bought. You can see the pullback to the 50 and now trading higher. Yeah, I like these, but like I say, I'm going to go for more growthier names in 2024 as the rates are falling. This is Amazon, and the 149.26 was the old high. I traded above it on Friday. So Amazon looks good as well. Google, somebody pointed out Google to me. I don't like Google. Not the company, just the stock. It's below the 50. It is set up here. But if it gets above the 50 and gets above that 139.42, I might like it a little better. Tesla, another name that traded tight in here. We discussed the converging moving averages, and now it's starting to break out. The last 3 sessions with volume here. So Tesla looks a lot better, and that's that's why we check every day. Every day a lot happens in a day, and you got to check each daily bar, and you can see that this thing pulled back to its 50 and just ramped higher. Tesla looks good here. And then NVIDIA, this one looks good as well, too. I have a bet with a friend that Netflix would get to 500 before NVIDIA, but I think I'm going to lose. I have Netflix, he has NVIDIA, pulled back to its 50. It's got this double bottom base pattern, pulled back to the 50, and now it's ramping higher. And you can see the moving averages, the short-term moving averages turn up. So I believe, NVIDIA is on a nice uptrend there. Anyway, that's it for the Mag 7. If there was one in that group I would buy, it would be NVIDIA for sure. But I don't own NVIDIA. I own smaller stocks right now. So I'm looking for growth and looking for, I know they're expensive names, but as the multiples are going to expand, I want to own growthier stocks. Monday's one, I just showing this because I think it's set up in a nice little base here. It's a weekly review. You can see on Friday, Monday had an inside day on Friday. So I'm interested in Monday. I do not own this stock, but you can see it's recovered. I showed you the IGV earlier, the software index, and this one's recovered out of this is still, I would consider a stage 1 base here. It hasn't broken out. You could see, in the past, before our nasty bear market of 2022, this one was a $450 stock. So it's at 189. So I'm interested in Monday on Monday. Snow is another one that's way expensive. You hear people say it's nosebleed valuations. True. Had an inside day. You could see the moving averages trending higher. I like Snowflake as well. I don't own it, but darn, that looks good on a weekly chart, doesn't it? Anyway, so I might be in the market for Snow. And, this is not a small cap stock. It's 65 billion market cap, but I like it. Datadog, you can see the long period of consolidation, big sell-off, cup with handle pattern. This that's a thing of beauty. It was up 7% last week. So I'm interested in owning Datadog as well. So there's 3 software names I don't own, but I'm interested in. And I'm going to move on from the software and go to the semiconductors just to show you one that I missed. I think we had 24 stocks on our watch list last week, and all of them went up. Some went up to a greater degree, but man, some of them went up like 20-something% in a week. So I'm going to get to that in a bit. But Broadcom, I missed. There's a lot of people teasing me. You got to get Broadcom, but I just missed it. I own AMD, so that's enough semiconductor meat for me. And you can see the big blue volume bars. Do you think the institutions are buying this stock? Yes. I believe that correlated with the move correlated with the earnings on, what was it, December 11th, or was it 12th? that it broke out. Yeah, the 11th. Okay. And you can see the big volume coming in. So congrats to the longs there. I'm not a jealous person. So I believe in karma. So congrats. I don't own it. Sorry, but I missed it. How about that? Can't kiss all the babies. AMD is the one that I own. I like to set up, this pullback here. Obviously, it had the big correction with the nasty bear market, and then it had this little base here. And I liked it as it broke above its downtrend line. You could see this downtrend here and the big move. I think that was with earnings as well. I could be wrong. But yeah, it broke above this downtrending line here on that session. And so that's when we got in, below 120, I believe, and bought it again here the day that Lisa Su announced their new products, and the stock sold off on that news. And it was just a delayed reaction. The next day it went up, almost 10%. So that's a move that should not be ignored, Dan. It was almost 10% with 119% above average daily volume, and it's just been trending higher ever since. So I'm happy with AMD. I did not get Broadcom, but I'm going to be okay. ARM is another one that people are talking about a lot on Twitter, and I just the valuation kills me here, but I got to admit this is a beautiful looking IPO chart. Classic cup with handle breakout here. So congrats to the longs, but I cannot get into a 72 billion market cap with 3 billion in sales. I'm sorry. It's just a recipe for disaster unless they're going to have stellar growth. The chart says it all though. So I can't deny that. That looks really good. So, yeah, congrats to the longs there as well. ACMR, I want to get into more of the smaller caps. This might even be considered a micro cap, 1.1 billion market cap, but this is a Silicon Valley semiconductor equipment stock. You can see it had a nasty sell-off, cup with handle, broke out, now went sideways again and formed another cup with handle. So this is one that I'm interested in. Smaller name, but that's kind of what I'm looking for in 2024. ALGM is Allegro Microsystems. This one came public in 2020, at the end of 2020, had a nice move there in 2023 and has sold off sharply. And I think the sell-off might be overdone. It was up 16% last week. Yeah, this is, they've got solid earnings and sales. This is definitely one to put on your radar there. I like it there, 28.99. I know, it's way below its 200, but, sometimes you got to take a swing at these things. And, like bad things happen below the 200, but you could see the short-term moving averages are starting to turn up here. So I'm more interested in, the short-term move. And if it gets rejected at the 200, so be it. But it's got a long way to go there. So anyway, that's Allegro. Okay, I'm going to go to the retail. I sold my Deckers to buy ELF because Deckers ran a bunch. I'm going to get to Deckers in a little bit, but it ran a bunch. And once the stock was up 25%, it, usually bases. So I just had to sell it and buy this one because it looked better to me. It broke above its downtrend line. I've been putting this on our watch list at MC Stock Charts. It broke above its downtrending line here, and I put it on there at 112, and again at like 118, 120, 130. Now, last week, it's a weekly review. I got to show the weekly chart. It was up 13%. So I think some people at AMC Stock Charts are pretty happy, but you can see the blue volume bars coming in recently, and that thing looked good to me. Still looks good to me. It's got that standard buy point at 139.85. I think you want to get in here, but if you're getting in now, I still think ELF is going to be a winner. I mean, if it does what it did in the past, it had this nice base, ran for more than a year. I mean, this thing ran, I'm not saying it's going to do it again, but, it ran from what, 30, 31 up to, 139. Okay. So that's a nice run of $100 or more. And now it's formed this, base for like 14 weeks, 15 weeks. So that's 4 months of basing. And I think that's enough. And ELF is taking market share, and I'm sure they're going to have a great fourth quarter Christmas season, and they'll be reporting strong earnings, I believe. Anyway, since I mentioned Deckers, I might as well show it. I wanted to show it with the gappers, but this thing gapped up on earnings. You know, if you got it there at 550 or 560 and it ran up to 700, I mean, that's a 25% gain. And so I just took it off. I mean, yeah, that's standard, right? Profit taking zone. And it pulled back to 700 on Thursday. Yeah. So, you know, it's a great trade for me. I love the shoes. I like the products, the stock. I mean, that's a hell of a run right there. So I just, sometimes I feel greedy or guilty. I don't know. Something about me. I just traded it for Elf. I made the trade. So 'tis the season to own Elf, I believe. Anyway, forget those two. Let's look at Lululemon, which broke out with earnings. There was something about the earnings call about them lowering guidance, but Wall Street, you know, didn't buy it. CEOs like to sandbag so they can wipe out their next, you know, they like to lower expectations and, you know, under promise, over deliver. Lululemon, I mean, this one we had it on our ready list back around below 400. Now it's, you know, near 500. So, you know, just congrats to the longs there. That's in the profit taking zone as well. So Lulu looks good. Costco just reported earnings, still has the $1.50 hot dogs. And, you know, congrats to the longs as well. That thing is a monster. And it's been a monster forever. So this is a monthly chart. You could see, I mean, this thing's gone from what, 20 bucks to 658. Yeah, not bad, huh? So I knew a manager who worked there, said you should buy it, and I didn't, but I always regret it and I haven't bought it. So, oh well. Congrats to the longs there at Costco. That thing looks fantastic. I'm going to put a firm in the retail group. I mean, buy now, pay later. This is classic stuff here with the breakout and then the pullback to the moving average and another, you know, massive move, pull back to the 10, right? So this thing is surfing the 10, and that's just a thing of beauty right there for a firm. So, you know, if you want to own this thing, just, you know, wait till it pulls back to the 10. I mean, this thing is a real strong stock, and it's made a nice move. It was up only 4% last week, but it was up 43, and I followed it up with 11 and then 4.5 last week. So a firm looks good to me. I like it when stocks go higher. Abercrombie and Fitch, I'm just showing this for the trend. It just continues to break out on earnings and just trend higher, pull back to the 21, found support, just surfing the moving averages. That's a thing of beauty for a trend trader. Now I'm going to go to the home builder stocks. These are tethered to the interest rates, which, you know, we know are coming down, or they're not going up, right? Jerome Powell told us are coming down. So Williams, that little nincompoop, came on Friday and said they haven't discussed it. But and that's why I think these stocks kind of got hit on Friday, along with the Lennar earnings report, which had some hair on it, but still a pretty darn good report. Pulte is just broken out of a base and then formed this shelf as a pullback to the 10 and then just blasted higher. DR Horton, which is the largest of the home builders, another, you know, breakout, then a shelf or a bull wedge pattern here, right here from the 130 back to the 125, the moving average, and then just blasting higher. These things are going parabolic. Builder First Source, this is my favorite of the group because it's a supplier. And this thing still looks good to me. Big base. This is kind of like Elf here a little bit. Big base. It had an inside day on Friday. Still near that buy area, though it's kind of extended. It's quite a bit extended. You know, you want to get them when they do this. You know, when they do this, pull back a little bit. You know, when they do that to the moving average, you don't want to get them up here, but keep an eye on Builder First Source. It's not out of the stratosphere. And this is TREX, another one that just broke out recently. It's in the, you know, building construction residential market. You can see the big volume coming in on TREX as well. That thing looks good to me. And the last one I'm going to show is Beazer. So we've had a good run, and there's a lot of stocks that are extended, but there are stocks setting up, as I showed you with the, you know, there's quite a few of them setting up. Beazer, I believe, is one of them. You know, wait for this pullback here. Maybe it comes back to the 30. 31, 32 level. We're at nearly closed on Friday. So it's definitely one on my watch list. Beazer Homes. I got to go to the cybersecurity stocks. CrowdStrike. This is one that we had on our ready list at MC stock charts around the 160 level. It showed flashes. I've got to show the monthly because in the summertime when our index was correcting, the Nasdaq corrected 12%. This thing was being accumulated. Now when the market starts to heal and cooperate a little better, CrowdStrike is just leading higher. You can see this thing just ramping. Yeah, this is one of those extended stocks, but you can see it's just trending nicely. And surf the moving averages. Nothing to do here. This is my largest holding, and there's nothing to do here. Just go play golf, go hike, swim, fish, whatever you do, hunt. But there's nothing to do here. Don't I guess you could trim if it's getting too big for your portfolio and it makes you uncomfortable. But this is the move on earnings. Palo Alto and Zscaler sold off, and this one ramped higher, 10% with 300% above average daily volume. And that's why we pay attention to those gaps. Those are moves not to be ignored, Dan. I'm going to get to that a little later. Zscaler, same thing. This is one of my larger holdings as well. I'm real heavy in cybersecurity, and it's just trending higher. There's nothing for me to do here. Like I say, I get a little uncomfortable when stocks have 25% gains or more, but I'm holding these because I think they could be huge winners, like real monster stocks. I could be wrong. I'm often wrong, but seldom in doubt. This is Palo Alto Networks, which pulled back, a ridiculous move, pull back on strong earnings. This company is just a cash cow. I believe this is one that you just stick in your retirement portfolio and hold it for the next 20 years. Palo Alto is a phenomenal company. You can see the IPO'd here in 2012, what at $17, and now it's 307. So it's trending in the right direction if you have the patience for that. Rapid is another one in the group that I believe still actionable. I mean, we had it on our ready list. I'm going to take it off because it's getting extended, but it's making a nice move. Yeah, I think it made a 52-week high on Friday. So yeah, this thing is getting extended, but yeah, I'll probably have to take it off for sure. But anyway, nice move for a Rapid. So just a lot of the cybersecurity stocks are doing well. And if you have patience, I know some of my friends that like Fortinet, which sold off a couple of times here and then now is rebounded. So if you got it recently at below 50, you're getting it at like 2021 summer of 2021 levels. So 2-year price retracement, that's kind of nice if you have the patience. This is a well-managed company that's not going anywhere. All right, I want to get to some of the more, since the market's cooperating better, I'm feeling a little more frisky, and I put Carvana on our ready list last week, and it only went up 27%. You could see the pullback to the moving average and why I put it on the list. And it's still, to me, if I'm still holding this stock. Bought it small because I don't want to go too crazy with the speculative stock, but had an inside day on Friday. That one looks good. The other one was Upstart. Heavily, is yeah, I know what Upstart does, but it was up 20% on last week, and I did not buy this one, but a few people at MC Stock Charts did and said they had a good week. Yes, you did. So, if you got in there around that 31 level and still looks good, had an inside day on Friday, maybe it'll get back up to that 72. That would be a nice move, but just wanted to point those out. Big winners. All right, I'm going to go to the drugs before I quit. Lilly has just been going sideways. They have a new drug application, an NDA, and it's probably going to get approved sometime soon. I believe it will, that it'll stop going sideways once it gets the approval. This is a long bit of sideways action after a big run. I know Ken Langone was saying that he believes it'll be the first billion-dollar drug stock. I'm not going to argue with Ken Langone. He's been pretty darn successful in his career. Novo Nordisk, another one that's just, I had to sell this one below the 50. I hated to do it, but I got to play by the rules sometimes. Just going sideways like Lilly, nothing wrong. The weight loss drugs are, they're just starting their ascent. I believe it's going to be a long time and a huge addressable market there. Since I'm going through stocks that had an NDA, this got a drug approved last week and skyrocketed higher. This is Vertex, had a move of 13% on 334% above average daily volume, a move not to be ignored, Dan. And you can see that this is just a monster stock. If I go better the monthly, this is another one of those. I know people don't like drug stocks, but I mean, come on, this thing has gone from, if you look back, what, $7 to $4.10. I mean, so, the big money's made over time. Somebody said it was the sitting. So, yeah, Vertex looks pretty good to me. I got to get into more speculative stocks. I bought a couple of these. This is a weight loss pill form. They have an NDA, I believe, for the first half of 2024 for a pill form weight loss drug. So probably one of the big fish are going to scoop this guy up. It's Viking Therapeutics out of San Diego. Had a nice move, I think, 2 weeks ago when Carmot was bought. I forget, I don't know, 5, 6, 8 billion, 10 billion, something like that. Anyway, this thing ramped 42%, and last week followed through with a 2% move. So the other one is TGTX. This one I got to go to the daily because we had this on the ready list. I know it's below the 200. You don't want to buy them below the 200. We had this on a ready list at 1140, and this thing keeps trending. You can see the moving average is trending higher. It came up to its 200, met with resistance, got rejected, did the Matombo thing, and then came back to the 10. And now last week blasted through the 200. So I like it a lot better now. And I believe it's going to fill this gap here from the drawdown there, 1956 there, $19.56 on July 31st. And that's not too far away there. It's a buck away. So I believe TG will do it. It's getting a little extended here, 14% above the 10, but those moving averages are trending higher. Their comps are going to be real easy to beat. You could see how much revenue they're generating now. I think the CEO said 35 million for the next quarter. So, 35 million compared to nothing. That's quite a big beat. And they're going to do that for the next few quarters, the next 3 quarters at least. So, probably be bought out as well. I don't know. I think Viking is a better chance of being bought out than this one, a one drug stock. But anyway, do I have anything else on drugs? Oh, if you want to speculate, these guys have an NDA, I believe, first week or two of January. I know it's a $3 stock. I don't deal with $3 stocks, but it does have this little pinching action here, trading sideways, moving averages trending higher through the 200. If you want to speculate, checkpoint is one. I just gave you 3. Great for speculating if you like. Anyway, that's it for me, except for I lied. In honor of the great Steve Jobs, I have one more thing. These gappers that I say, don't ignore, they're flashing, right? It gapped here. This thing's talking to you, it's flashing up here. This is while the Nasdaq was correcting 12%. This thing was gapping higher 20% with 400% above average daily volume. It's at $70 there. Then it does it again. December 1st, so it goes from 70 to 111. I think it got up near 120. Now it's pulling back to the 10 as these moving averages catch up. So that's why I say you don't ignore these. Now the market's behaving better. I don't own this, but I want to own it. So I'm looking to buy a software name, and this is one that I'm definitely looking at. I'm going to be patient, though, going to display some patience. Hopefully this forms just a elongated shelf, something like that, for a couple more weeks. And maybe from 2024, I'm looking at some of the smaller cap names. This is $11 billion stock. I'd call it a mid cap. I'd say it used to be 2 billion or lower was small caps, but I think with inflation, we'll call it 10 billion. This is Samsara IoT, definitely set up in a base, double bottom here, tried to break out, then form this cup, and then trades kind of weakly. I mean, every time it surges higher, it sells off. Surges higher than sells off, which you could look at it two ways. Like, okay, if I want to buy it, it's giving me a chance to get in. But if you're long, you want this thing to rip higher with power, and it just won't do it. There's some sellers in there. And very frustrating stock, Samsara, but don't ignore the gaps higher. That's the point of this exercise. GTLB, another one that broke out of a base with earnings. I like them when they break out of bases, not extended. This had a move of more than 11% with nearly 900% above average daily volume, and just proceeded to ramp higher. Pulled back 1 or 2 days and ramped higher up to 67. Now pulled back. So this one's trending nicely as you see the short-term moving averages trending up. Sentinel-1, this is a cybersecurity stock, and with Palo Alto and CrowdStrike, ramped higher on December 6th, 16% move. And just this is what I want to see with IoT, just power higher. Yeah, it pulls back one day, but the IoT is just really frustrating me. And I don't own it for that reason. I don't own this one either because it's not giving me a chance to get in. But I'm waiting for a pullback. And I believe if the market pulls back, a couple of days, maybe this one will pull back and give us a chance to get in. But that one looks good as well. Path, another one kind of frustrating like IoT. Yeah, ramped higher on December 1st with IoT and ESTC the same day. That was a Friday, I believe. Pulled back to the moving averages, nice. Ramped higher, nice. But now had an inside day on Friday. But you could see, if it's going to start surfing the 10 and that 10 is trending up like that, it's not going to take you very long to make money with UiPath. Anyway, that's it for me today. Thanks for watching. There's a lot of stocks set up in bases, even though there's many that are extended. I'm seeing a lot of quality stocks set up in bases that I have at MC stock charts. I didn't show them all here, but that tells me that the market still, the rally can continue, even though we have many stocks that are extended and are likely to pull back. Stocks that are set up in bases, maybe they pull back with the market, but they're probably going to trade higher. And that's it for me at mcstockcharts.com. We never give up. Thank you for watching.